We're sitting at around about 600, 620 for SC6 at the moment. So yes, we're leveraged to that. So we're hopeful that, and we believe that the prices will come back in the future. There's a lot more demand out there than people realise, and we'll time things to come onto the back of that. Well, it has to be timed basically because that's what we're doing. So over the next 24 months we'll be getting the plant up and operational, and by then I'm sure that these prices will be back up again.
Hello ladies and gentlemen, I welcome you to the avz-minerals presentation here in Frankfurt. I'm lucky to have Nigel Ferguson with me. He's the managing director of the company, and we would like to know what is behind the lithium development company in the DRC. Obviously, with the Manono lithium project, the company has one of the best assets in the world, and we would like to talk with him about the current status, the potential, and the future, of course. And that's why I'm talking now with Nigel. Hi Nigel, good to have you here in Frankfurt. Thanks for coming, and we have had a presentation with 30 people attending. It was quite informative, but we would like to have also for our investors in our community a little bit of an update. What is behind avz-minerals and the Manono lithium project, and what are the key elements and criteria as to have such a world-class deposit?
Certainly. Well, look, obviously we've completed our resources drilling. We've got a very large deposit, 400 million tonnes, at a fantastic grade of 1.66%. So that's a really rock solid, excuse the pun, but a really rock solid starting base for the project. We are now completing feasibility study. We've completed 2 scoping studies. The indication from those is both that this will be an extremely positive deposit with regards to cash flow, low capex cost, and a fairly decent producer of high grade quality lithium concentrate. We are appointing our engineering firm fairly soon. MET test work is underway. We've got 13 tonnes of sample sitting there. Dewatering of the pit at Roche Dure is underway at the moment, and we should be able to access that pit within about 3 months, maybe a little bit longer. And as soon as all of those come together, obviously we'll be finishing the definitive feasibility study so that we can look forward to financing this and put it into production.
That sounds like a good plan. What about grades? We have high grade here with the deposit and very, very thick intercept. So how is the geology in your point of view?
Look, it's unparalleled basically. We have an average of 250 metres of thickness for these pegmatite at Roche Dure. At Carrier de l'Est further north, about 5 kilometres, we've got similar style thicknesses. But Roche Dure is just special. It's massive. It's homogeneous. The variability of the minerals is very low, so we're very consistent in our product that we should be able to produce. And we're expecting a plus 6% concentrate with very low deleterious elements, phosphorus and fluorine and iron. So yeah, very happy with the deposit. It's been nature's gift.
And talk about the economics, you have done a scoping study so far, working on the feasibility study. What are the numbers for the 2,000 tonnes per annum?
2,000 is the starting case, our base case. We produce 440,000 tonnes of concentrate. The NPV at the end of the day there was about $1.8 billion for the project itself. Our share of it for AVZ, 60%, about $1.1 billion. We ended up with an NPV of, as I said, 1.8 billion, but the IRR of 93%. So it pays back itself in about 3 years' time. Second year of production, we're really starting to get into it. So very strong financial numbers.
And avz has a market cap of 120 million right now, and the capex is maybe 165. How would you like to finance the development towards production?
Well, there's several ways of doing it, obviously, but we'd like to have a structure whereby there's some equity and some debt. We believe that we can possibly sell a portion of the project or combine that with an equity placement in AVZ at a premium. It's all being discussed at the moment with various entities. I'm hopeful that we can finance the full $165 million very easily. I think the economic figures obviously speak for itself. As long as we can get this into production, which we believe we can, then that debt will be paid back extremely quickly.
One of the major shareholders you have on your register have actually signed an agreement with you, supporting you towards feasibility study. Could you comment on it?
Yeah, Huayou Cobalt, International Cobalt, I think it is, the Hong Kong listed entity. They've got a 9.8% or 9.6% interest in avz-minerals. They have 2 operating mines in the DRC, cobalt mines. They're working on a 3rd one. They've also invested in some nickel plays in Southeast Asia. Look, they have an operating history in country, which we were very keen to tap into. So our non-binding, non-exclusive agreement with them is a strategic alliance whereby we can tap into that information. They've been forthcoming with some pretty good information so far on road rehabilitation costs, transport, etc., etc. So that will develop as we go forward.
So let's talk about 2 items here. First of all, the transportation cost is certainly in the investor's mind, which is a hurdle. And secondly, your byproduct.
Tin. Yeah. No, certainly. Yes, we have about 63% of our costs at the moment are transport costs. Obviously, with the lack of infrastructure in country, some of the roads are in a deteriorated state, so we'll need to find investors to look after those. We do have some links already with European funds that are looking to do some roadworks in our province, which is very handy for us. We also have the Chinese government with their road and bridges program, essentially fixing the road up from Manono back down to the south to Lakasi, $285 million worth. So they're very much on top of that. It's then a case of getting it onto a railway line as quickly as possible. I think that's the simplistic point of view, is try and get it on the railway. It's cheaper to move it, so that would be the best way to do it, yes.
And why should investors buy into the avz stock now? I mean, the stock was trading from 2 cents to 40 cents, now trading around 5 cents. Give us a little bit a summary of the history and the path, and why do you think the company is highly undervalued?
Well, simplistically, we've had our big bubble on the back of the resources coming out, so everybody jumped on board. Obviously, there was excitement about that. It ran up to, I think, 37 cents as an intraday high. As soon as we announced that we're going into definitive feasibility studies, as is the cycle with most companies, it starts to tail off a bit. Also, we're very much leveraged to lithium prices, and lithium prices have fallen off lately. We're sitting at around about 600, 620 for SC6 at the moment. So yes, we're leveraged to that. So we're hopeful that, and we believe that the prices will come back in the future. There's a lot more demand out there than people realise, and we'll time things to come onto the back of that. Well, it has to be timed basically, because that's what we're doing. So over the next 24 months we'll be getting the plant up and operational, and by then I'm sure that these prices will be back up again.
So it looks like we have here really a monster asset, and this will go into production. That's out of question. There has to be a lot of work to be done towards feasibility study, but we are pretty close on it. As Nigel said, it will be the year end or beginning of 2020, but we think it's a highly attractive company. We are shareholders by ourselves, which we have to outline because there is a conflict of interest in doing that interview. But watch out and do your homework and research on the company, and you will find out there are not so many alternatives on the planet. And Nigel, thank you very much for being here and the interview, and all the best for you.
Good. Thank you very much then.